tech sector?
I mean, the tech sector is tied to crypto, right? And so the relative situation of a compression of interest rates, particularly longer term rates, um, improves the NPV of tech assets because the cash flows of these assets, which are far out into the future, are strongly impacted by long-term rates. In other words, higher long-term rates represent either opportunity costs or higher capital costs, and so lower long-term rates therefore improve the multiple for techs, the tech sector, and this is no doubt contributed in general to the rally. Tech has massively outperformed everything else. I think Nasdaq's 34%, something like this year to date. And it's again, we're still in a bubble. We're still in a liquidity bubble around the world, despite the fact the Fed's raised rates to 5.5%, despite all these things that have gone on. And in some sense, because when you look at from a value perspective, it's very hard. The market's priced for perfection in some ways. Certain markets are, and again, this is what markets do, right? But it's notable, right? And it is something where clearly there is still liquidity around, enough liquidity to perpetuate. And this comes back into crypto, where we still have this ongoing evolving value proposition, where from regulatory perspective, this is still in need of a framework which makes sense, and it will happen. And the value proposition on crypto is real and it's massive. But we're still in the very early stages of this process, because the key value proposition as it relates to global capital and credit markets is the ability to tokenize and to create an efficient vehicle for lending and borrowing in crypto, right? And so you have this issue of a lack of regulation, which is keeping out fiduciary capital right now, because they can't invest or they can't participate in things where there is no regulatory framework. And a fiduciary, by definition, means you can sue someone in a court of law, right? So that's first. And secondly, the actual valuation, which is what we've been talking about crypto. When you look at a stock or you look at a bond or another asset, there are ways in which you can value that asset. And it's usually based on cash flows. And certainly you can do this in some sense for Ethereum and for, you can look at fees, you can look at some of the network effects and things like that. But the reality is there's no actual substantive way to look at Bitcoin or to look at Ethereum or look at Algorand and say this is what the value should be based upon. You can base it upon certain metrics, but the point is that because you don't have a defined rigorous valuation model or methodology present, it means as a professional investment manager with fiduciary responsibilities, it becomes a more speculative process than an investment process. That too is keeping a lot of money out of crypto. So again, this is a value proposition I'm 100% sure will be solved in coming years. But it's also part of the current challenge. And that means then how are we making this process an economical one? And what are we doing about it? And so from our little point, our corner with Algorand, we're going to start also a very selective strategic capital raise on this new gold and real world asset tokenization process that we're going to be doing. But basically what we're doing is we're going to be facilitating through a combination of traditional markets and crypto a real yield in DeFi. That comes in. And the point, though, is with all of this, is we're using and looking at a market-based focus and solution because this is who we are and how we're set up. But the point is with all of this is that there needs to be real economics behind what's happening and what we're doing. And that's our striving and sole focus is to create real value for market participants and an economic reason for developing this type of business and in creating and in increasing the liquidity space that we sit in, because that's really key. And the more that grows, the more confidence, the more people see that use case, the more that there is real efficacy, and it's not just buying something because you think it's going to go to 100,000 or whatever it may be, right?
Yeah.
And that's kind of the whole premise behind what we're trying to build, is something real and something that will be substantive in terms of its value proposition from an economic perspective.